Hello everyone, my name is Sean and welcome back to... It certainly doesn't take a brilliant investing ape to realize that in today's world, the markets have taken a turn for the wild, wacky, and in some cases, the completely outrageous. Which markets, you may be asking? Well, if you've been keeping up with the business news lately, then apparently all of them. While unprecedented inflation is forcing you to shell out more and more of your hard-earned dollars at the grocery store and gas pump, asset bubbles appear to be running rampant, inflating the prices of everything from the price of milk to financial instruments like stocks or real estate, and of course, those notorious and pesky cryptocurrencies. And did I mention NFTs? Ah, yes. The latest blockchain crypto boom. Is it any wonder that so many are proclaiming that markets have taken a significant turn and may even be approaching certifiable madness? As 2021 begins to draw to a close, it appears that the world and its mechanisms for financial exchange and wealth generation have been scrambled in a way that's really hard to make sense of. But try and make sense of them we shall, because just like you guys, we at In the Black are also wondering, what the is going on out there? So without further ado, let us dive right in and see what observations and lessons can be pulled from the multi-directional labyrinth we're facing. So I suspect that many of you consider yourself to be pretty well informed, right? I mean, don't we all monitor the news to stay updated with important world and economic events? Well, if instead you fail to take much of a break from the mindless dopamine-induced screen scrolling that really engulfed the world over the previous year, you might not be any worse off than the rest of us. The news media, being just as dumbfounded by the multiple black swans just tearing through the markets, will literally profess in one headline that investors and business owners are just frolicking in the fields because the market is soaring, while the very next headline they explain that the markets are overvalued and unsustainable. Or we're told that everyone is going back to the office. No, wait, we're all going fully remote. No, it's a hybrid world. COVID is over. No, the infection rates are rising again. Companies are hiring. Wage pressures are up. No one wants to go back to work. Don't go to college. No, go to college. Hard! But once again, I digress. Let's get back to those employment figures, because we still have an astonishing 2.4 million Americans less in the workforce than we did pre-pandemic. What on earth happened to all these people? Did everyone just decide to cash in their crypto gains and drop off the grid? And the answer to that question is a resounding yes! 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 Yes. Some did actually strike it rich and cash in on the latest meme stock craze and crypto moonshots. God bless those lucky few. But let's get back to the employment numbers again, because I'm sure you're asking yourself, isn't a total of nearly 7.5 million Americans being out of work cause for just a tad bit of concern? Doesn't this mean that we might at least be somewhat at risk of an impending recession? Don't be silly, of course not. How can we possibly be approaching a recession when inflation is at a healthy 6.2% as of October? Oh no, you're not at all wrong for maybe thinking that something fishy might be going on here, and that this is not the way that markets or the economy typically operate. Or is it? Now, when it comes to inflation, which typically occurs when prices increase on goods and services due to overheating demand, there's usually no cause for major concern, at least up until the benchmark consumer price index runs above the Federal Reserve's 2% target level. But now that CPI is hovering around 6.2% for the trailing year as of the end of October, it might be time to worry just a wee bit. Or maybe not. But no matter how you slice it, 6.2% is an astonishing figure, given that at the height of the pre-pandemic economy, inflation hovered at a measly 1.4%. I mean, can you imagine if every single year the cost of your groceries went up by a whopping 6%? For those retail investors out there saying to yourself, oh boo-hoo, what's 6% gonna do to me? I receive a yield triple that on my whatever coin holdings. Just remember that what the market giveth today, the markets can take away tomorrow. Whereas when CPI increases, it can take much longer to reverse course. While the outrageously high yields on crypto tokens aren't likely to hold up forever, high levels of inflation can certainly be a lasting phenomenon. In rare cases, extreme inflation can last not only for months and years, but up to an entire decade or more. So why might this matter now? Why should we take heed at this moment in time? Well, if the worst occurs and inflation persists at this rate, your $150 weekly grocery bill will soon seem like a super bargain. That rapidly growing inflation monster seems to hint to us that demand is strong, people are happily shopping, spending money, and that both our lives as well as our economies are on a very cusp of returning to sweet, sweet normality. But for those of you that have been spending time in the real world and not the metaverse,
and then smoking meats, grilling meats, good smoky flavor. Smoke a brisket for like 12 hours.
You know that all is not what it seems. You see, today, prices are increasing not because of a demand problem putting pressure on supply and prices, but because of a supply problem applying pressure to the world at large. The pandemic has caused global supply chain issues that continue to persist. And that's not just for toilet paper, guys. We're also seeing bottlenecks and delays in all types of items, both big and small. Trying to order a bed, a couch, or even a bicycle from a retail store and being able to receive those items in the next 4 months may require holy water, rosary beads, and a whole lot of prayer.
Well, look, I like the Christmas Jesus best, and I'm saying grace. When you say grace, you can say it to grown-up Jesus or teenage Jesus or bearded Jesus or whoever you want.
In New York City, arguably the busiest global hub for international commerce, retail outlets and office buildings are still devoid of life compared to pre-pandemic levels. It's a wonder how so many retail stores are able to survive and what the hell they're going to do with all that unsold inventory. I know, make an image of it, burn it, and then turn that image into an NFT. And if that sounds mad, then you're clearly not an investigate. Airports, the arteries of the modern world, are unfortunately not faring much better. Many still feel abandoned at times, with those passenger airplanes not converted to cargo carriers, often flying half full. While the industry is reporting higher fuel costs, though they do expect holiday travel to improve demand, but like other industries, they too are grappling with labor force shortages. You'd think that airfare literally being 16 freaking cents would incentivize some additional air travel, but nope. I still feel like the last living person on Earth when I arrived at some of the most significant airports in the US, like New York's JFK, LaGuardia, or Miami International just a week ago. So much for returning to normalcy, huh? But fear not, you're not alone, because things are just as discombobulated in the world of finance and investing as they are in consumer goods and services. For those of you dissatisfied with the stock market and its lofty valuations on money-losing companies, cryptocurrency might seem to be a more compelling, if not risky, investment alternative. I mean, what can possibly go wrong when a completely anonymous group of strangers asks you to hand them over your capital on the promises their project will go to the moon? Of course they're going to execute, and you'll all be multimillionaires overnight, just as promised. Okay. But in all seriousness, be careful out there, guys. And please don't allow yourselves to fall for some of these harebrained crypto schemes. This grift has been so popular as of late that a brand new term has been coined, no pun intended, aptly titled the rug pull. In the case of the Squid Coin, based on but not affiliated with the Netflix hit series Squid Games, and no, this is not a joke. The anonymous developers made off with a total of $3.38 million after the token ballooned to a high of $2,800 US, before inevitably plummeting back down to pennies. Is this how tokenomics is supposed to work? These kinds of developments continue to add to the head scratching all around us. Just as news of pandemic deaths appear to be subsiding, hopes of increased holiday travel are rising, and echoes about the return to normalcy are heard to be just right around the corner. The new scuttlebutt of the metaverse is now charging forward to take center stage, offering us all a whole new way to live in a fictitious world where we can own digital land, digital homes, digital clothing, show off NFT art, have personal relationships with cartoon-esque avatars, and prepare for a world that turns our backs on the physical environment altogether. At this current point in time, I think it's safe to say that we are in no way back to life as normal, and a world overflowing with contradictory abnormalities seems to be here to stay. But one thing is certain: if you don't have time to do deep due diligence on your next moves, it just might be that time to stop gunslinging and just buy some index funds. So that's it for today. Thank you for tuning in, and we'll see you next time on In the Black.